Okay, good morning, everyone. Looking at the US stock markets, the Dow has earlier retreated from the recent peak of around the 27,000 psychological level. Since then, it has pulled back towards the 24,000 psychological level before staging a recovery. The recovery, however, could not last long as the Dow could not see any follow through buying interest beyond the 26,300 points and subsequently retraced over the past three consecutive trading days. And overnight itself, despite we are seeing some of the recovery on the Dow Jones on intraday basis, we are seeing the Dow has pulled back on the final hour of the trading hour to close at the negative territory. So for now, we could expect further weakness on the Dow Jones to trend back towards the 25,000 to see how it holds there. If the 25,000 level fails to hold, then we might see further weakness on the Dow back towards the 24,100 points. In the meantime, any gains for now will be just capped towards the 26,000 or even towards the 26,300 points level on the Dow Jones index. Similarly, on the S&P 500, we are seeing the S&P 500 has retraced from the 2940. Since then, it has pulled back towards the 2600 psychological level before staging the recovery towards the 2815. After hitting the 2815, we are seeing the 4 consecutive trading days of pullback on the S&P 500. The weakness on the S&P 500 came in due to the decline in crude oil prices after the energy shares has tumbled about 2.7% on overnight, dropping off the gains in the other sectors. So for now, we could expect further weakness on the S&P 500 to trend back towards the 2700. If the 2700 level fails to hold, then we might see further weakness towards the 2600 on the S&P 500. The earlier gains on the US stock markets were wiped out. Earlier gains due to the potential positive trade talks between US and China was wiped out due to the US President Donald Trump comment on OPEC's potential cut in production in 2019. He has blasted OPEC's move in the potential cut in for 2019. So consecutively, we are seeing the crude prices has pulled back after staging the mild recovery just towards the 68 US dollars per barrel mark. We are seeing the crude prices has pulled back for the next 12 consecutive trading days, and on overnight itself, the crude prices has plunged about 7% or negative of $4.24 on overnight. So for now, we could expect further weakness on the crude prices due to the lingering oversupply condition, and also the potential sluggish or moderate demand from US and from global demand. So for now, we might see further weakness towards the next support at the 50, with any gains will likely to be limited towards the 60 US dollars barrel level on the crude prices. Okay, some updates on the local front. The FMKLCI has earlier staged a mild recovery from the 1670 level towards near the EMA 20. However, it rejected the EMA 20 level of around the 1730 level before staging the next pullback as the FMKLCI retraced below the 1700. With the 1700 level fails to hold, we are also seeing the further weakness on the FMKLCI overnight or yesterday, as the key index has gapped down, taking cue from the weakness in US stock markets. So for now, given the weakness in the crude prices, which has slumped about 7.1%, coupled with the declining in the ringgit and also the weakness in the crude palm oil prices, which fell to a fresh 3-year low, we could expect further weakness on the FMKLCI index trading back towards the 1670 to see how it holds there. If 1670 fails to hold, we might see further weakness on the FMKLCI. In the meantime, indicators appears to be quite negative right now, as you can see that the MACD histogram has been turning lower, whereas the MACD line has turned flattish as well. But while the RSI continues to maintain its position below the 50 level, so indicators are also pointing somewhat a negative sentiment on the FMKLCI. On the lower liners wise, we did mention that the lower liners on this day itself, on the 5th of November itself, we are seeing the potential weakness on the small cap index after staging at 4 consecutive days of a recovery. This is just taken as a technical rebound play that we're expecting the next wave of pullback on the FM small cap index. So for now, we could expect further weakness on the FM small cap index. The small cap has been trading lower for the past 3 consecutive trading days. So for now, we could expect further weakness back towards the 12,700 points level on the FM small cap. On stocks wise, we can watch out for firstly would be Denkomac. Denkomac has again staged the first wave of recovery towards the 58.5 cents a level. Since then, we are seeing a healthy pullback on Denko as price pullback with some of the declining in volumes and subsequently price traded on a sideways manner over the past trading trading months. So for now, we are seeing this as a short-term consolidation breakout on Danco as price breached and also closed above the 44.5 cents a level, accompanied by some of the improvement in volumes yesterday. With the breakout above the 44.5 cents, we are seeing the MACD indicator has been trading higher, heading towards the zero level, whereas the RSI has been rising above the 50 level yesterday. With the breakout above the 44.5 cents, we could expect further technical rebound on Danco towards the 50.5 cents or even towards the 54 cents level. Your stop loss point will be located below the 41 cents level on Danco. On Miko chipboard, price is still on the downtrend of formation, so any recovery from now will be just taken as a technical rebound play. Price has earlier staged a first wave of recovery. It rejected the EMA 120 level, which is around the 53 cents, and subsequently price has pulled back again, forming the lower low formation. After touching the recent low of around the 29 cents level, we are seeing price consolidated between the 29 cents towards the 33 cents level. And on yesterday, we are seeing a good bullish engulfing candle was being formed as price returned the EMA 20 level, accompanied by some of the improvement in volumes. So for now, let's monitor for the breakout above the 33 cents. If there's a breakout above the 33 cents, then this could be the W-shape or double bottom formation or breakout that we're expecting price to hit towards the next target price at the 38 cents or even towards the 42.5 cents level. Your stop loss point will be located towards the recent low, which is currently located at the 30 cents level on Miko. So for now, should price breach above the 33 cents, we could expect the MACD indicator to uh, trade higher towards the zero level, whereas the RSI could be rising back above the 50 level as well. The next company will be Lei Hong. Lei Hong is still in a downtrend formation, so any recovery from now will be just taken as a technical rebound play with the recovery above the 32.5 cents level. We are seeing Lei Hong has recovered towards the 43.5 cents, and subsequently price has staged a mild pullback. And on yesterday, we are seeing a good bullish candle was being formed. So this could be the short-term breakout pullback and the continuation pattern that we're expecting Lei Hong to trend towards the 43.5 cents, or that will be the intraday target price, followed by the next target at the 49.5 cents and also the 53.5 cents level. Your stop loss point on Lei Hong will be located towards the 36.5 cents level. Lei Hong has also came out with a news saying that they have made the joint venture with NH Food Limited to open their new processing plant in the Pulau Indah Industrial Park. Just give me a minute for the chart to load. Okay, on Teo Seng, price is also still in a downtrend of formation. However, we are seeing this as a potential bullish divergence signal was being formed with the price has been earlier forming the low formation, but the MACD indicator has been forming the higher low formation throughout this period of time. And on yesterday itself, we are seeing a good bullish candle was being formed on Teo Seng as price has recovered and subsequently closed above the EMA 120 level. So for now, Given that the company has announced a very strong set of corporate earnings has recovered very strongly due to the stronger average selling prices in chicken eggs, we could expect price to head towards the 89 cents or even towards the 97 cents level. Your stop loss point will be located below the 77 cents on Teosing. If you look at the weekly chart itself, this is potential recovery trend as we are seeing the price has trended lower and form a hammer candle on the weekly chart, and subsequently on this week itself we are expecting good bullish candle was being formed on Teosing. With if price could maintain its position at least for this week itself, we are also seeing the MACD indicator usually issue a buy signal on this week, whereas the RSI has also risen above the 50 level as well. The last company for today will be Aeon. Aeon has been on a pullback phase since hitting the recent peak of around the 2 ringgit and 65 cents a level. Subsequently, price has headed lower towards the recent low of around the 1 ringgit and 51 cents before staging a recovery pattern. During this recovery phase, we are also seeing the potential higher high and also the higher low formation being formed. So for now, we are seeing this as short-term breakout pullback just towards the EMA 9 or the EMA 60 level, and a potential continuation pattern was being formed as price has formed the good bullish engulfing candle on yesterday. With the bullish candle was being formed, the MACD line has really risen above the 0 level, whereas the RSI has recovered back above the 50 level as well. For now, we're going to monitor for the next breakout above the 1.83 cents for us to target price at the 1.99 towards the 2.06 cents. Your stop loss point will be at 72 cents level on Aeon. If you have any questions, you can put in the chat box and I will reply shortly. There's some question here. Firstly, on Yongtai. Yongtai has seen the sharp pullback phase following the violation below the 1.37 cents level. Since then, price has staged a recovery from the 57 cents. After finding some support along the 57 cents level, we are seeing a sideways movement on Yongtai. So for Yongtai right now, during this period of time, we are also seeing some of the accumulation was taking place. It did form some bullish candle, but the next day itself, we did see a pullback, bullish candle again, subsequently pullback. Once again, we are seeing a bullish candle recently with some of the improvement in volumes being traded on yesterday. So for your Yongtai right now, what we need to do is we are going to monitor for this short-term consolidation breakout above the 66 cents. It managed to breach above the 66 cents level on intraday basis, but it did not close above that. Now let's monitor for the breakout above the 66 cents for us to trend towards the 73 cents or even towards the 82 cents level. Your stop loss point will be located towards the recent low, which is currently located at the 60 cents level on Yongtai. Things appears to be quite bottoming out right now, as you can see that the MACD indicator has been forming the high low formation throughout this period of time. So this could be the lower risk form that you can accumulate on Yongtai before the recovery kicks in. Maxter has again formed the higher high and also the higher low formation, with the uptrend inter orientation formation being established towards the 54.5 cents level. Subsequently, price staged a pullback and traded on a sideways manner. With the recent pullback, price has already formed a hammer candle on top of the EMA 60 level yesterday. So for now, let's monitor to see if there's any recovery pattern. If we did see a recovery pattern like a bullish candle, at least for today, then this could be the confirmation of the recovery phase on Maxter that we're expecting price to head back towards the 51.5 cents or even towards the 54.5 cents level. Your stop loss point will be located towards the 44 cents on Maxter. On our Upcom, this the downtrend of formation with the EMA 9 below the 20 and the 60 appears to be crossing below the EMA 120 level. So for Ofcom right now, we are seeing your price continues to continues to consolidate between the 65 towards the 78.5 cents level, with not much trading interest in Upcom right now, with the volume still very thin. We could expect price to just linger between the 65 cents towards the 78.5 cents until we can see a breakout above the 78.5 cents with some of the improvement in volumes, something above the probably above the 8 million volume. Then only we could confirm for the recovery on Upcom towards the 91 cents. In the meantime, price could likely to trade on a sideways manner, but if price were to violate below the 65 cents, then you have to cut loss immediately. On our Protasco, our price is still on downtrend of formation, but during this period of time, we are seeing a lot of accumulation was taking place on our Protasco. For now, in order to trade on our Protasco, we need to monitor for the only we can confirm for the recovery towards the first target price 40.5 recovery from the market do on after the 27th of November after the market. For now, we expect neutral results on is expected to announce the flattish or weak quarter earnings in the upcoming quarter results in absence of the new launches of property development, whereas the construction segment has been quite sluggish with the payments from PPA One Malaysia is quite slow, and whereas the maintenance segment or the road concession segment is just fat, will just maintain at a fairly stable state. Just give me a minute for the chart to load. Paras appears to be traded just on a sideways manner for now. On our Paras transit, in order for us to trade on this counter, we need to monitor for this potential symmetrical triangle formation breakout above the 28.5 cents. If price managed to breach above the 28.5 cents, only we can confirm price to recover towards the 31.5 cents level. In the meantime, a pullback below the 25 cents will be an immediate stop loss on our Paras transit. So for now, price is likely to just linger on a sideways manner unless the company could announce a very strong set of quarterly earnings. If there's no further question for today, that will end the morning briefing. Thank you.